So welcome everybody to the Texas REIAs. The Texas REIAs is the largest by far network of real estate investor associations and realtors, real estate investors, in the great state of Texas, 150,000 members, participants, and attendees going back to 2003. We provide all kinds of resources, 257 vendors, 25,000 buyers, and another resource, 1,000 private money lenders. And another resource we provide is training and market data. So I'm going to share with you a little market data right now. What's going on in the market? This is one of our many status charts. We post these online as well. The average price of a house in Texas, $445,000, up 4% year over year. Median price of a house in Texas, $347,000, up 0.6% year over year from 1 year ago today. But if you want to look at one single data point that is like the most important thing to look at, it's this thing right here in the middle, months of inventory. What is months of inventory? The way that's calculated is as follows. If you took all the houses for sale in the MLS and you stopped adding any more, we're just going to take what's for sale, we're going to sell it until it's gone, we're not going to add any more. How long would it last? How long before the shelves are empty? And the answer, 5.7 months, which is also the average amount of time it takes to sell one house. Now that's average. Some houses take longer, some houses take less, right? Average, 5.7. Let me put that into perspective for you. They say if there's less than 6 months of inventory, you're in a seller's market. If there's more than 6 months of inventory, you're in a buyer's market. What kind of a market are we in? Seller's market. Seller's market. And we have been in a seller's market for years, right? And I'm going to tell you why. And by the way, this is all Texas A&M School of Real Estate and a bunch of online sources. We just report the data. I don't come up with this data. I'm reporting it. We don't have an agenda to try to convince you the prices are going up or prices going down, okay? We have strategies for up markets. We have strategies for down markets. We love them both. Sometimes it's easy to buy, hard to sell. Sometimes it's easy to sell, hard to buy. It's never easy to buy and it's easy to sell. But actually, right in the middle, arguably, is the best time to be a real estate investor because it's not hard to buy and it's not hard to sell. But let's look at a history. 2021 prices went up 18% in 1 year. 2022 prices went up 10.7% in 1 year. 2023 flat. 2024 flat, except at the end of the year it went up a little bit. Why did it go up a little bit? What happened at the end of 2024 to interest rates? They went down a little bit. All right, and when interest rates went down a little bit, prices went up a little bit. Now, interest rates and prices. Do interest rates make home prices go up or go down? What do you think? Both. Yeah, sort of. I mean, for sure, when interest rates go up, houses are less affordable. Right? Fewer people can afford them, so there's less demand. All real estate really cares about is not interest rate, it's supply and demand. So when interest rates go up, demand goes down, and that pushes prices down. But there's some offsets. What are the offsets? Normally, 2/3 of houses for sale are resale, and 1/3 are new construction. Right now, it's inverted. Why is it inverted? Why are people not selling their houses? Because they got a cheap mortgage and they don't want to give it up. People should be selling their houses. The economy's not bad. People are making money. We got low unemployment. People should be saying, honey, let's go buy a bigger, nicer house, but they're not. Why not? Because they don't want to give up their 3% mortgage. And all that supply is being held off the market. When there's less supply, what happens to prices? Let's go up. So we have things pushing prices down, we have things pushing prices up. maybe the biggest of them all, migration. Last year, California lost 500,000 people. Last year, Texas gained 500,000 people. Where do you think they went? Yeah. And there's another 12 million people. We don't know where they went, but there's a bunch of them here too. And they all need a place to live. And we're not building enough houses. In fact, nationally, who knows this? We're in the middle of a housing shortage. Who's heard of this, that we're in a housing shortage? We literally have 6 million fewer houses than we need for all the people that need a place to live. We don't have enough houses. What does that do with home prices? Push up. So we have things pushing down, we have things pushing up. Let's go through some of the cities. So let's talk about San Antonio. San Antonio is the most affordable major city in Texas. 393,000, up 4%, 224 median price, up 4%. 5.9 months, right in the middle, all right, right at 6 months of inventory. Leases. Lease prices are flat, leases are up a little bit. What does that tell you about apartment buildings? Are they full, are they empty? They're pretty full. They're pretty full. Yeah, and the reason they're pretty full is because a lot of people are moving to Texas. So what's driving the market? The economy a little bit. Real estate doesn't care much about the economy, but when the economy is going well, they're a little more likely to buy real estate. Consumer confidence is kind of neutral. Unemployment's great. Job growth is great. Stock market's kind of neutral. Business growth in Texas is great. So there's a lot of good economic things, or at least neutral economic things. Affordability, interest rates, they're high. That's a downward pressure. Right? Price trajectory is flat. It's not up, it's not down. Yellow is flat. It means it doesn't push up, doesn't push down. Right? Housing supply, active listings flat, months of inventory 6, right in the middle. Housing permit trajectory. We're not building enough houses. We're not keeping up with the demand. So that's putting upward pressure. Construction labor, that's another problem. Contractors are dying. The average general contractor is 58 years old, and they're not getting replaced. So I have some advice. If you have a teenager, don't send them to college. Buy them a hammer. Seriously. I know plumbers making $1 million a year, guys. Plumbers. I know plumbers that are making $1 million. They go to school, they get a degree in something they don't want to do, with a bunch of student debt, work for some jerk with 2 weeks of vacation, or they can become a plumber and make $1 million a year. So think about that. We need contractors. Demand. Closed sales trajectory flat, pending sales trajectory flat, but the big one is migration. People are moving to Texas. And that, more than anything else, is saving Texas real estate. The reason we have not gone into a buyer's market for years is people keep moving here. And we're just not building enough houses for all the people that need a place to live. So we have all this growing demand, and there's just not enough houses. Even though the market has some weakness in it, there's just still not enough houses for all the people that need a place to live. And then some wild cards, tariffs, who knows, right? Interest rates probably are going to go down. We don't know. Forecast. We do a forecast every year. Our forecast is there's not much going on. Interest rates will probably drop a little bit between now and the end of the year. Nobody knows for sure, but that's what most of the experts say. And if that happens, it will probably juice the market, but just a tiny bit. Meaning we expect prices will be flat to maybe up 1%. We don't really expect any big things to happen in the real estate market in terms of prices. But I'll repeat something I said earlier. It's a great time to be a real estate investor. And the reason it's a great time is because it's not hard to buy and it's not hard to sell. See, like I talk about all 12 strategies in this market, they all work. People are like, oh, I wish I invested like 4 years ago. The market was red hot. Yeah, you could sell something in a day, but it was impossible to buy. right? And it was not a normal market. Now we have a normal market, right around neutral in terms of interest rates, normal, buyer market, seller market, right in the middle, normal. All the strategies work. It's actually a great time to be a real estate investor.